Ladies and gentlemen, boys and girls, children of all ages, CBG proudly presents to you the crypto bull market that no one has wanted. Welcome in. I am the crypto bull god. This is all in the charts. If you appreciate the content, make sure to hit the thumbs up button, drop me a comment, click the bell icon for all notifications to know when I go live on this epic journey towards new all-time highs within Bitcoin and many of the altcoins that you have reluctantly been holding on tight to. Guys, I have a lot of really good tidbits of information to share with you today. Of course, we know that the Federal Reserve came out and they announced a 50 basis point cut, which I was leaning towards, that they would end up doing. In the grand scheme of things, it's all noise. Whether they did 25 or 50, it's not going to make a hell of beans difference in the grand scheme of things. But nice to see that what I was thinking they were going to do, they ended up doing. So I hope everyone's having a great day. Hope the day's going well for you. As I shared with you earlier this week, if I've been annoying you with my bullish outlook on the market, soon you will be aligned with me. Very soon you will be aligned with me. Guys, let's just get into things. I want to share something with you here. Of course, I was not listening to Jerome Powell today, but I want you to read this headline here. It says, breaking, the Federal Reserve has cut interest rates by 50 basis points in their first rate cut since March of 2020. Now, I have a question for you. What happened in March of 2020? Well, we had the zombie apocalypse virus, right? I was just reminiscing about those fun times with someone recently about how their business was closed. Fun times. But the bigger question that I want to ask is, back in March of 2020, right? We had this flash crash in the markets, right? This is when the Federal Reserve, right around this time period right here, announced an interest rate cut. Now, what happened to the crypto market? Well, we went on a nice parabolic run up to $64,000 and then double topping at 69. Now, guys, we all know that history does not repeat, but quite oftentimes it rhymes. I have shared with you, okay, I'm a nerd at heart. I spend a lot of my time listening to a lot of podcasts, a lot of information, a lot of educational content. And something that I've been spending a lot of time absorbing and really taking in and trying to understand to the best of my ability is this whole liquidity cycle that I keep bringing up to you guys, this whole business cycle. The more I learn about it, the more I realize it's almost like a game. It's just lowering and increasing of interest rates and lowering and increasing of M2 money supply. Guys, the rates are dropping and the M2 money supply is beginning to pick up. It's going to be fuel for your risk on assets like crypto. We're at that point right now. Many people, please do not be mistaken, because there's a lot of misnomers out there that I've been reading on X. There is a misnomer that now that the Federal Reserve has begun to cut interest rates, we're entering some massive recession. Disagree. We are at the final stages of this liquidity cycle. We can expect that your risk assets are going to appreciate significantly in value. The interest rates are going to be coming well down. I've signaled that I believe 2 to 2.5% is where they're going to land. Could even be lower, but I think 2 to 2.5%. The dollar index is going to go well below 100, maybe 96, 95, 92, okay? And then, once we sort of find our bottoming there, the dollar will resume its strength. Assets we'll go through a big bear market, but we're not there yet. Let's not talk about a bear market because we're not there. I've been saying this for a long time now, okay? I've been sharing so many views. If you've been dedicated to the channel and you've hung around and stuck with me to this point, I commend you. I commend you. It's been 6 months of just consolidation, not distribution, accumulation and consolidation. These are things that we've gone over for a long period of time. That time, and I'm going to show you supporting evidence, that time period of consolidation is coming near an end. And the thing that you have to recognize is when Bitcoin does decide, when it makes a decision that it wants to break up, it doesn't give you a warning. It shoots up. When it enters that parabola, it shoots up. It shoots up, okay? So we're just going to take a look at some indicators here in terms of what I'm going to be assessing. And it's very likely, I would say it's very likely that I will be doing a weekly close on Sunday evening because there's a weekly, we're going to get into this here. There's going to be a weekly candlestick close and there's going to be a 2-week close. Okay, and those are both things that I want to hit on today and something that I want to assess with you at the time of close on Sunday. If we assess short-term price action, yeah, there's no question. We got the higher lows, right? Here's another higher low right here. But we still have lower highs. We definitively on this lower time frame, guys, I can't stress this enough. Something we do need to see clear up is negating these lower highs. It's all about getting up to this 65.6 area, okay? Nothing has changed there. We need to get up to 65.6. I suspect we're going to get up there very shortly, but we need to get up to 65.6. But let's not spend so much time on the lower time frames here. Let's get into the high time frame views. And in particular, what I'd like to take a look at with you is the weekly and 2-week chart. Before I do, I see I have a few comments. Let me see who's on the live stream. Feel free to drop a comment. Thank you for the engagement today. His Majesty the King. That is quite a name. TM, welcome in. Steady, always good to see you. Ricky, good morning. Well, it's good evening here. Good afternoon, I guess. Yes, the global money printer is... Guys, global liquidity is going to increase. History says it. Okay. Earthwalker, what are your thoughts on Japan future dumping their bond or treasury notes with the DXY holding on what looks, I can't read the rest, like by a thread? Well, I'm focused just on the dollar index. Yeah, we'll get into the dollar index. Let me not, you can see I have the chart up, so we'll get into it. But I don't have any specific thoughts on Japan because I haven't read anything there. And I really don't have any thoughts there. I focus on the dollar index. So let me get into the weekly view here and the 2-week view. And then I'll bring it back to your comment on Japan there. So the first thing that I want to take a look at with you guys on the weekly chart that we talked about, the 50 simple moving average is holding up. You can see we have lower highs coming in here clearly, right? The other thing that I've pointed out to you guys, we have a clear pennant, okay? Nothing has changed here. We have a clear pennant, and we have a clear pole. This is a massive, massive bull flag, okay? A bull pennant, bull flag, whatever you want to call it, doesn't matter. This is an extremely bullish pattern that when it presents itself on any chart, there's a much higher likelihood of breaking to the upside, okay? So let's not lose track of that, all right? We're not even going to take a look at a measured move because the measured move is pretty damn high. So we're not even going to, I don't want to float that number out there. Now, a few key things to point out and why I believe we are on the verge of an explosion up in price, right? We don't do clickbait on the channel. The reason that I feel confident that we're going to see an explosion up in price is for a few different reasons that I want to make sure that I clearly articulate. Number one, the Federal Reserve has begun to decrease interest rates. Typically what this has led to in times past is some time that passes with appreciation of assets in value as the M2 money supply increases. That is point number one. Point number two to keep in mind that I've shared with you before we look at the indicators is that we have spent so much time in here that once we start to break above key levels, 66.5 in my opinion is the first area I want to see, and then 68. I've signaled to you, once we clear 68, guys, we should begin to accelerate quickly. And that's not because I hope that that happens. That's because I'm allowing history to guide me in that view of the market moving forward. Once we start to get up towards 68, just shy of 70, I think this market is going to very quickly accelerate, okay, very quickly. And you will be very thankful that you remained patient, which I have been stressing. I stress it all the time on this channel. Now, looking at the price indicators, there's a couple things I want to point out. Let me get the MACD out of the way. The MACD is beginning to flatten out, which is great. Ultimately, what we want to see is an avoidance of getting below zero here, going negative. We want to see this thing curl up, right? We want that histogram to turn green. Okay, so that muckiness on the MACD looks like it's clearing up, but there's a very important development on the relative strength index. We have had this downward sloping area of resistance on the relative strength index. If we can get a really solid close, okay, a really solid close up towards maybe $61,000. This, and we're about there, where are we at right now on price? 60,370. Even if we maintain a close at current levels, we will break the descending resistance here. Now also notice we created a double bottom relative to September of 2023. This level on the relative strength index is at 44.8. So something we want to watch for, and we want to make sure that holds up as support on the RSI, is that 44.8 level, okay? Right now, if I had to describe to you what's going on here, the RSI, you can comment on the relative strength index very similarly to how you will comment on price action. In this case, what's happening is the relative strength index is sort of coiling up in this area right here. And we're at a decision point where the relative strength index is either going to break down below 44.8, which is not my primary view. If that were to happen, we'll revisit the conversation. If that does happen, we would spend several months trying to clean up the chart. It would take us quite a bit of time. But so long as we do get a bullish close this week, and we can break the descending resistance here, it's significantly increasing the likelihood that the relative strength index is going to begin to create higher highs and higher lows and ultimately break out above 70. We want the relative strength index based on history to break above 70 because that's when we see the most explosive price action within the market. I would not be surprised one bit to see the relative strength index pushing up at and above 70 by November. Would not be surprised. In fact, I'm expecting that. So we'll have to see how it plays out. The other thing that I wanted to point out to you that we've spent some time talking about is the stochastic RSI. Now, in the past, when we've gotten, and I've just used recent history here, I'm looking at 6 data points. In the past, typically on the weekly chart, when we have the stochastic RSI break below 20 and then break back above 20, okay, which is the trigger line, typically that has resulted in large price movements up in Bitcoin, okay? This was a positive signal in 22, positive signal in 23, another positive signal in 23, another positive signal in early 24, and then we had 2 false signals here, right? So what this is telling us is, just based on recent history, there's a 67% probability 67% probability that now that we're beginning to see this stochastic RSI, and this is something we're going to watch for in the weekly close, we're starting to pop our head above 20. If we can close the week out at or above 20, this is telling us, just based on recent price data, that on the past couple years, there's a 67% likelihood that this will result in a significant movement up in price. But what have I said with you? We don't want to just look at the weekly. What we can do to feel further convinced is to look at the 2-week. There are less false signals on the 2-week. In fact, in looking at past prior iterations here, I only went back to 2022. There have been no false signals. Okay, no false signals. So you can see here, when we've broken back above 20, this was in late 22, we went on that big run from 15,000 up to, I don't know where we went to, 30,000, somewhere around there. We went on a big run up, right? Well, this was in, again, late 23. This is right before my surgery. I was off YouTube for a couple months, very salty about that. We went on a big run up from about 20,000 up to $74,000, okay? We're waiting for this cross to come in. Now, can we expect the stochastic RSI to close above 20 for this coming candlestick close? Because this candlestick is set to close this week, right? No, it's unrealistic to expect this stochastic RSI to break above 20. But if we can get a bullish close on the 2-week candlestick, it's setting us up beautifully for the preceding 2-week candlestick to potentially get that cross going right into the fourth quarter that I keep talking about, which I'm fully anticipating being an extremely bullish month for risk-on assets. So the key thing that we want to watch for, okay, and I'm fairly certain I'll be with you on Sunday for the weekly close. We're going to take a look at the stochastic RSI on the weekly. We're going to take a look at the relative strength index. We're going to take a look at the relative strength index on the weekly, and then we're going to come to the 2-week and see, how much closer are we getting to this 20 trigger line, because that's going to be critical. Now, something else I'm going to be watching for on this 2-week, interestingly enough, on the relative strength index, I don't know, why did this get moved? Interestingly enough, on the relative strength index on the 2-week, you can see we had a touch here, and then we broke right here, okay? And we have this descending area of resistance here on the RSI. Why are all these lines messed up? I just drew this. You can see we have descending resistance here. So what I'm going to be interested to see on the RSI is once we can reestablish firm footing, and I have this area marked because I'm fully anticipating whenever we have our blow off top, right? The best is yet to come, just like the Frank Sinatra song, okay? Really. Again, this comes from a place of spending an exorbitant amount of time studying the market. I feel very confident in making the statement that I feel like the best is yet to come. And when the best does arrive and we start to see euphoric price action, what we want to watch for is the RSI getting up into this area. Now, will we have a negative divergence on the RSI? We can deal with that when we get to it. But that explosive price action will also be accompanied by entering this green region at 70 plus. All the way, who knows where we'll top out at. But we want to negate all of this resistance here. We want to start to break back up here and get into this area. And that's not going to happen. Most likely wouldn't happen until very late 24, early 25. Okay, now, wanted to get back to a point on the Japan futures dumping their bond or treasury notes. I don't keep track of all that stuff, which I was getting fumbling around with my words. All I was trying to say is I don't keep track of all that stuff. I simplify myself, or simplify my life. I just take a look at the dollar index. Now, the way to properly interpret the dollar index, and if someone tells you that you can't chart the Dixie, that's coming from a place of someone that doesn't understand technical analysis. I'm not going to name names, but I've heard that at least on one big channel that said, well, you can't chart the Dixie like you would chart other assets. That's an ignorant statement. That comes from a place of no education on technical analysis. That person had no idea what they were talking about. Yes, you can chart the Dixie. Okay, the same sort of application of price patterns and price data and price indicators, they all apply. Now, the way to properly interpret the dollar index is that the dollar index is essentially looking at the strength of the dollar relative to other currencies. So the premise would be, if the dollar is weakening, okay, if the Dixie is weakening, what that implies is other currencies around the world, okay, are gaining value. It could be the yen, it could be the euro, okay? These things are gaining value, which is weakening the US dollar. Now, typically what we see, and I've hit on this before, and this just gives more credence to the idea that we're going to see some explosive price action relatively soon here. This dollar index chart is weak. Again, if the dollar index chart looks strong and it flew in the face of my analysis, I'd come out here and say, well, I mean, there's no hiding it. The Dixie is very strong, and I'm not sure how to interpret that. The MACD, the RSI being at 33, the stochastic RSI, price action is holding on by a thread here at the 200 simple moving average and psychological level of 200. 100, excuse me. We got lower highs coming in. Okay, at some point we'll get some sort of a knee-jerk reaction and an increase in the DXY. But this chart is weak, and there's nothing in this chart telling me that it's bottomed. Maybe we found a local bottom. Maybe we will hover in this area for several weeks. That's fine. But ultimately, there's nothing here, and there's nothing here suggesting strength. The other thing we want to watch for, and I spent some time sharing this with you the other day, we want to watch for weekly closes right under here. Because when we close under the 200 simple moving average, we know one of the most basic concepts in technical analysis is moving averages are an area of price confluence. Just like when we draw horizontal lines, right? So if we're above a moving average, it should act as support, which it's doing right now. It's acting as support. If we start to get candle body closes below the 200 simple moving average, it's significantly increasing the likelihood that while we may get a wick up and battle this area here, we're just going to continue rolling over until we find a bottom. So there's weakness coming in the Dixie. And now, I believe for the last point that I wanted to make on the live stream, and then I'm going to summarize all of the key points that we just spoke about, and then I'll get to any questions that anyone has for me. That is, why constantly when I pull up this view, is it never the view I want it to be? Why? Why is LRC on Bitcoin dominance? What is happening? Why are my trading view charts getting fucked up? That's what I want to know. Okay, so this is, save this shit. So this is Bitcoin dominance. We're not even going to take a look at any of the technicals here. We're going to just take a look at the price action. Let's put this on a 2-week. And we've spent a lot of time talking about this, guys. Things are lining up. Okay, things are lining up. And once I go through here, I'll summarize all of the key points like I said. We are at the apex. In fact, we're breaking above right now, 58%. Remember, I shared with you that in my view, 58 was going to be the top in Bitcoin dominance. And if we went above, we would see a wick and we might go as high as 60%. But we're not going higher than 60%, okay? We're literally at the apex of a rising wedge. A rising wedge is a bearish price pattern, and we're literally right at the top here. This has a very high probability of rolling over. And we know from times past, when the Bitcoin dominance is rolling over very hard like that, what is that signifying to us? If the Bitcoin dominance is accelerating downwards at a high rate, okay, we've spent all this time this momentum is losing, it's losing steam. It's the little engine that can't, okay? What it signifies when Bitcoin dominance begins to heavily bleed, the reason for that is because Bitcoin's dominance is decreasing. Well, that's an obvious statement. But what else is going on? If Bitcoin's dominance is decreasing, what that means is altcoin dominance is increasing. The altcoins are running harder than Bitcoin. This is setting up for this right now. Let's summarize the key points. Number one, we have the federal interest rate cutting by 50 basis points because they recognize they should have cut in July, but they're using lagging indicators, which is intentional, but they're using lagging indicators, so they're always behind. But the Federal Reserve cut by 50 basis points. We know from times past, I just showed you an article, the last time they cut interest rates was March of 2020. What happened in the market? We saw, now, again, we had a black swan event, but there was a large injection of M2 money supply. We saw a massive increase in risk assets. As the Federal Reserve continues to decrease interest rates, you have to increase the M2 money supply to have that interest. It's not like the Federal Reserve comes out and just decreases interest rates. Liquidity increases. Global liquidity is increasing to cause the interest rate decline. Look it up, okay? So we know for a fact that M2 money supply is going to be increasing. Interest rates are going to be decreasing. We have this time window. We don't know how long. We don't know if it's going to be the first half of 25. We don't know if it's the second half of 25. We have topping indicators to help us with that. But we know that is setting us up perfectly for a run here. The other thing we're beginning to see on the weekly, second point, that's one big point. Second point I would summarize, a lot of these indicators on the weekly are beginning to turn around. MACD is straightening out on Bitcoin. The RSI descending resistance is beginning to break. And the stochastic RSI, which has a 67% chance based on recent probabilities looking at 2022, is signaling to us if we can close around current levels, we can expect further upside because we're getting that positive cross across 20. Now, above 20. The third point that I wanted to make, or that I did make, is the stochastic RSI on the 2-week. This is really the big one. This is the big one because there's been no recent false signals. So we really want to watch closely on this 2-week chart to see how price action, how the relative strength stochastic RSI closes out on the 2-week. And we can anticipate, depending how we close, next candlestick, it could set us up for that positive bullish confirmation. The other thing that, conjointly with that third major point that I forgot to include in the original talking points from earlier, you can see this moving average. This is the 21 exponential moving average on the 2-week. Typically when we're in a bull run, okay, we like to stay above here. You can see when we've broken down below, we've had problems. Okay, we broke below here. We temporarily got above it and then had a flash crash and a move up. Here you can obviously see what happened. I don't want to bring back PTSD. And if we come to recent price action, you can actually see we saw a little bit of a fake out here. And we kind of saw that with this other candlestick. But the other bullish signal to us is this 2-week candlestick is closing well above the 21 EMA at 56,700. Fourth point, I think this is the fourth point, pretty sure. Fourth point is the DXY, the weakness on the DXY, and typically what happens with that inverse relationship. And the fifth point is Bitcoin dominance being at the apex of this bearish pattern that's going to result in this thing bleeding, which if it's bleeding, it means your altcoins are running very, very hard. Keep in mind, coupled with all of this, one of the initial points that I did make, which I'll throw into this summary is becoming jumbled up. We have spent a significant amount of time consolidating. A significant amount of time that doesn't go against the grain of what we've seen in the past. I've been saying for a long time now, this sort of price action, it's not the decline in price that weeds people out. It's the length of time. People are so impatient in this market, and they don't understand these 3 to 6 month consolidation periods are very typical for Bitcoin. Just look at a chart. And we've looked at it. Very typical. And the thing that I've been pointing out to you is, and I've been saying this for a while, we had a fake out here. I told you, once we get a closing body confirmation on a daily above 68, this is going to run hard. History tells us that. You should not expect, okay? I'm not expecting, and you shouldn't expect, some sort of run up to here and then just kind of floating around here for a long time. No. Once we get close to $74,000, this shit's going to get real quick, okay? You're going to see Bitcoin going up first, then you're going to see a lot of the major alts running, then you're going to see a lot of the mid caps and then the small caps. Let's see what we got here. Any idea how long after these rate cuts will it take before they move the big money from bonds to assets like Bitcoin? I have no idea. Raghorn. I'm not focused on any of that stuff. I'm focused on everything I shared with you. I'm focused on the things to succeed in selling my investments at a logical point. Keep in mind, I am extremely bullish about the entire industry 10 years out from now. This channel is not focused on having theoretical conversations about where we're going to be 10 years from now. This channel is focused on analyzing the immediate price action and asking ourselves where we are in the grand scheme of a bull or bear market and helping to strategize profiting in this market. That's what this channel is concerned with. And so the view that I take on the channel is the same view that I take with my own personal investments. I am only, do I think, let me put it this way. Do I think that the United States is fucked in many ways if Kamala Harris is elected president? Yes. Do I think that it would usher in regulation that would be harmful to crypto? Yes. But I'm not concerned about that right now. And it's not going to impact my view of this bigger picture on the business liquidity cycle. Okay? It's not going to invalidate that. It doesn't matter if Trump or Harris gets elected. I am focused on assessing when we are likely topping in this market so I can sell my investments and I can actually make a fucking profit. Okay? That's what all of you should be focused on. That is your number one focus. We've done a lot of work on this channel for months and months and months preparing you for times like this. And if this run is what I suspect it to be, and we are to get a major bleed down in Bitcoin dominance, I want to make this point perfectly clear to you. This bleed down here should be something similar. It doesn't need to be exact, but it should be something very similar to what we saw from 2020 going into 2021. For anyone who was here in this market in 2020 and 21, when the crypto bull god got in true crypto bull god form, which I will get back to when that time arrives, it was an extremely exciting time. There were so many altcoins running so hard. We should expect something similar this time around. GRT to $20. Yeah, sure. I think the channel is getting spammed. Do you guys have any questions for me? I mean, we're up against time. That was actually a lot of content. I filled up 30 minutes with that. Do you have any questions for me before we jet? And tomorrow, obviously, I will be back for TA Q&A on Thursday. I did make an announcement earlier, given... Oh, give me one second. Sorry. Whoopsie. Getting an Instacart delivery order and have a gate. Being very transparent with you as always. I have a gate here and I have to let this person in and I did not see them calling me. They got here like uber fast. I'm having some asparagus and cod for dinner. But I did make an announcement that I will be live streaming. I will be live streaming for the weekly close on Sunday. So make sure you click that bell icon for all notifications because this weekly close coming up is very important. All right, guys, that's going to do it. Until next time, let's all spread awareness and let's carry the education forward. Take care.